The war is on. The war is off. Who knows what Trump's doing? Gold is up. Gold is down. Who knows what gold's doing? There's a lot going on that we're going to cover in this week's briefing, including my take on what's happening in Australia. So stay tuned and I'll see you very soon. Welcome again to the weekly briefing. 10 minutes we have, and by the end, you'll understand why the single most dangerous thing in investing isn't bad information. It is good information that is out of date. So here's what happened. The June inflation report came out in the States, and it was a monster. Consumer prices actually fell 0.4% for the month. Now, that is the biggest one-month drop since April 2020. And we know what was around in April 2020, right? We were in the depths of the pandemic. Annual inflation dropped from 4.2% down to just 3.5%. And the core number, the one the Fed actually watches, was completely flat when everyone expected it to rise. Now, it beat expectations across the board, not close, but absolutely comprehensively. The market did what markets do. The odds of a rate hike this month collapsed from around 42% down to roughly about 15%. Treasury yields dropped. Stocks, well, they surged. Gold jumped about $60 an ounce in minutes as well. So far, so good. Genuinely good news. Now, watch what happens when you ask one more question. And that question is, why did inflation fall? Now, it wasn't the Fed winning. It wasn't some clever bit of policy, because we all know that they're not that good with clever policy, right? It was one thing and one thing only, and that is energy. Energy prices fell nearly 6% in June. Petrol fell almost 10%. That's it. That's the whole story. Strip out energy and there's barely a story at all. Okay, so why did energy fall in June? Because of the 17th of June. The US and Iran, they signed a ceasefire, which since has kind of gone a bit more haywire, but the Strait of Hormuz, the choke point that about a fifth of the world's oil sales in total got reopened. So tankers started to move, oil started to come down, petrol at the pump came down, and that literally fed straight into the number that everybody celebrated. Now, here's the part that should make the hair on your neck stand up, though. That ceasefire is dead. Trump declared it over on the 8th of July. Over the weekend, 12th or 13th, whenever it was, the US struck more than 80 targets inside Iran. Iran closed the strait again, and here we are once again with a blockade that's back on. And oil, well, crude was around $72 a week or so ago, and it settled at nearly $85. Now, that is a one-month high, and on the very same day, the market was celebrating cheap energy. Now, let's read that back slowly. Traders bid the market up because energy was cheap in June, while energy was actively getting more expensive on their screens in real time. One analyst put it perfectly when I saw, and he said oil and petrol have already started climbing again, but the inflation report won't show it for another month. Now, the market didn't get bad data. It got good data about a dead world. So let's move on to gold. And if you want to see what that kind of chaos actually looks like at the coalface, look at gold over the last few trading sessions. This is the bit I really want you all to sit with for this week. Now, gold ran up to around $4,190 an ounce last week on the whole war fear going on. Then Trump killed the ceasefire and it reversed hard. Straight back down through 41.50, I believe it was. Then on Monday, it dumped almost nearly 3%. Now, that's its steepest single-day fall in over a month. Then yesterday, or the day before, I believe it was, on the inflation number, it ripped back up. And we're going to see this happening, chopping away, because four major direction changes, 5 sessions, one asset. We're going to continue to see that choppiness, especially around Trump bringing a ceasefire and then bringing it back on, and then all the nonsense that's happening with that. Now, if you bought gold and just held it, Where are you? Well, basically nowhere, right? Over the last few weeks, because it's just been chopping up and down, you wore every bit of the stress and collected none of the movement. But that's okay, because meanwhile, the market handed out 4 separate opportunities to anyone with the skill to read what was in front of them. But we're talking quite minor moves here. Like I said, and I always say, gold for me is a long-term hold. Gold's just had its worst quarter in 13 years, sitting roughly a quarter below in January record. Am I bothered? No, I'm not at all, because I believe, in my opinion, even though we are going to see, continued volatility and see things moving up and down, these short-term movements are just volatile in a more respectable front. So let's bring this to Australia. And my favorite detail of the whole week with Australia, our favorite friends at the RBA, they parked at, I think it was 435 after 3 hikes this year. That wiped out every single cut that we got last year. So unemployment is currently sitting at 4.5%. Now, this is the highest since late 2021. Auction clearance rates have been stuck under 50% since May. Now, here's the deal. Our 4 biggest banks are all looking at that exact same data. Same economy, same numbers, same country. Westpac reckons we're getting 2 more hikes and the cash rate hits 4.85. ANZ, Commonwealth, NAB, they all reckon the move is down probably sometime in 2027. Once again, same data, opposite conclusions from the 4 most resourced forecasting teams in the nation, with armies of economists and budgets that you and I will never see. So let me ask you honestly, if they can't agree on what the hell is going on, what exactly is their forecast worth? Well, what are the odds that you, reading a headline on your phone, on the train, or wherever you're going, how on earth are you going to be able to outpredict them? Well, you're not going to be able to. And that's not an insult, that's liberation, because it means prediction was never the job. So here's your signal for the week, and it's the biggest one that I have given you, I believe. Every single piece of data you will ever receive is a rearview mirror. By the time a number is published, it's history. The CPI told us this in June. It's the middle of July now. The ceasefire that made June cheap, it literally died on the 8th of July. So the report was accurate, but it was useless all at the same time. There is exactly one thing in this entire game that is live right now, this second, and that is price. Price is not a forecast. When you look at your phone, there's no misconceptions there. It's no forecast. It's not an opinion. Price is what's happening at that point in time. An investor wants to be told what happened. A trader watches what is actually happening. Now, last week I told you Michael Saylor got beaten because he only had one move. Well, this week, the whole market got beaten because it was looking at one date, and it was the wrong one. This is why when I say if I lost everything tomorrow, I'd rebuild it with trading, I'm not being dramatic. It's because the skill of being able to read what's in front of you does not expire. A forecast expires. The second reality moves, data expires before it's even printed. The skill never does. And they can take everything that you have, but they can't take what you know how to do. So that's honestly the whole reason why I've been talking about the different strategies and how it works. It doesn't need to know what Trump does next or what the Fed does on the 29th or which of the 4 banks is right. It responds to what price is actually doing. And that is why I always like to keep on top of it in real time. Now, I'll say what I always say because I don't do fairy tales. Of course, when we're looking at things in real time, this is trading, and trading does carry risk. You can lose money. A system that responds doesn't mean a system that always wins. It means you're playing the live game, though, instead of the highlights reel. So your one action for this week, open a chart, any asset, it doesn't matter which one, and just look at the last 5 days. Count how many times it actually changed direction. That number is how many times a forecast would have been wrong. And it's how many times a response would have been right. It costs you nothing. It's 2 minutes. Do it. I promise you that something will click. Now, the comment of the week, it was something like, Mate, you're just talking your own book, which is fair. I am. I'm also the bloke who told you last week that the number I was quoting was wrong before anyone in my comments could. So judge me on that, okay? Subscribe, because next episode I'm going to be pulling the curtain back on a lot more of the real-time, real data and how it all actually works. But thank you again. Remember, build the asset that they cannot take, and that asset is Bitcoin. I'll see you next week.